Hey, you are viewing a weekend special and perhaps listening to a weekend special on the Korelin Economics Report. This is being originated. How can something be originated? This is originating from the San Francisco Hard Asset Conference. Great venue, by the way, here at the Marriott Hotel in downtown San Francisco. Pretty good crowd. I'm chatting with Brent Cook right now. Decent crowd, I would say, given the status of the market right now.
I'm actually surprised how good it is. Yesterday, a lot of the sessions were packed. I had a good crowd this morning at my speech, and it's better than I expected.
Oh, I'm going to be giving a speech here in about 45 minutes, and I'm looking forward to interacting with the audience, to say the least. You know, Brett, you and I were talking off the air a little bit this morning about you feel that, and I'm still somewhat not fully decided on this issue yet, but you think we're probably close to the bottom in terms of the resource sector, the stocks of the companies involved in that sector. And you gave a great example as to what your rationale is. And you said, Al, I was talking with a company this morning that $9 million in cash, and they have a market cap of $6 million.
And a good property.
And a good property. That's got to be pretty close to the bottom.
It sounds like it, doesn't it? It's got
One
that
would
feel
think,
to it.
yeah.
I don't think, in general, I think this junior market's got a lot more damage coming. But this is where you want to start identifying those things and start buying. We're not going to pick the bottom, right?
No.
But
no.
if you buy something for less than it's actually worth, that's a good start.
I would agree 100%. So you're starting to buy stock again, is that correct?
I'm being really, really selective. What I've been buying recently is just where I can identify a company with an asset that has a value, and I'm buying it for that or less, and I get the expiration upside. So what I'm really trying to do is cover my downside right now.
Yeah. Well, it's been a tough time. The last year or so has been a tough time. A lot of people, myself included, are saying, I think we maintain challenges ahead of us right now. In the sense that, in my opinion, the election of President Obama probably really isn't helping our sector at all, simply because of the direction that I think he's trying to take the country. But I don't think he's going to win in that. I really don't. I think the investors are going to start coming out because we do have bargain basement prices right now.
I agree. I would wager a bet with you that by next year at this time, the U.S. economy and stock market looks better than it does today.
Now, that's an interesting point. You're one of the few people who I'm hearing that from. Give me your rationale.
I just think America has hit bottom. Our economy has hit bottom. This is a vibrant economy. There's a lot of money sitting on the sidelines. You can borrow money for nothing. We can produce things better than most in China. We're going to see manufacturing coming back slowly. I think we're going to see America start picking up.
Well, you've been talking with Paul Van Eden, obviously, because Paul and I discussed that in Chicago a few months back, and he's very, very bullish on America. And I got a lot of time for Paul. I thoroughly respect his opinion, as I respect yours. I'm kind of on the other side of the fence, though. I don't think it's going to be any better a year from now. And I think the reason I would say that, and here I'm not talking about the investment community, I'm just talking about the economy in general. I mean, we've got some really, really bad things going on. Our country's insolvent, number one. Number two, we have a government that is very, very divided right now. Nobody seems to want to even think about working together. We've got unemployment rates that keep going up. We got consumer confidence that continues to go down, and we have a currency that I'm not predicting it's going to collapse, but I would say there's a better chance today of the currency collapsing than there was, let's say, 20 years ago.
Yeah, I would agree with that last statement, but we're still, and that gets towards what we're really doing here is gold. I think gold is more likely to go up than down, given what we're seeing across the globe. But I will wager a bottle of Lookout Ridge wine, that next year at this time, the market's better and the economy's better.
Okay, define that, and I'll take that bet. Now, when you say the market's better, which market are we talking about?
The Dow.
Okay.
The U.S. stock market is going to be higher.
And what about the resource sector?
Resource sector, that's a tough one. I do think it'll be higher.
That's our business.
Okay, I do think it'll be higher. I think what it's going to take to get the resource sector moving is a bit more confidence in the U.S. sector. And as we see the economy improving, if that happens, more risk money will come into our sector. So by the end of next year, I think we'll be in better shape.
I think personally the money is going to come into the sector for just the for just the opposite reason. I would wager that the money is going to come into the sector primarily because, as our colleague and friend Bob Moriarty says, people are going to they're going to continue. They're going to start. Forget the word continue. They're going to start to want to buy things. And the companies that you and I are involved in have things theoretically.
Theoretically, so a few do. Yeah.
Right. Yeah, exactly. Okay, I want you to define one thing for me because I didn't realize we'd now. Lookout Wine is a little bit more than $5.95 a bottle. So, and I've got a number of bottles back in our wine cellar at home. But having said that, when I say I don't think the economy is going to be any better, I would quantify that in the following way. Number one, the unemployment numbers. Number two, the debt. Number three, the entitlement level of spending. And number four, consumer confidence.
Okay, in my view, I think consumer confidence will be up, and unemployment will be down from here. The rest, I agree with you.
Okay, now in talking about consumer confidence, and I just want to be real clear on this. In talking about consumer confidence, I think it's still going to be quite negative. I mean, if it's 38 versus 36, that. To me, that doesn't matter. I think it's still going to be very, very negative. So I guess I'm talking a little more in a macro sense.
Okay.
But you know what I'd rather do?
It's only a bottle of wine.
I'll buy a bottle of wine, and you buy a bottle of wine, and we'll just share them.
Okay, that's not it.
We'll get your wife and my wife, and we'll share them.
Okay,
there you go.
We're on.
All right, you got the final word. What do you want to say, my friend?
I think this again, getting back to what we're really doing here. I think we're entering a really fantastic time to be very selectively buying these junior stocks that have cash management and an asset at a discount to value.
And that I agree with 1,000%. Brent, thanks so much.